Welcome to Unlocking the Decentralized podcast. In this episode, cryptocurrency expert Abhi Soomaney explores Web3, blockchain, cryptocurrency tax and investment while engaging with industry pioneers, technologists, and investors. Here is your host, Abhi Soomaney.
Welcome to the 7th episode of Unlocking the Decentralized. Today I'm going to talk about how cryptocurrency exchanges like Coinbase and Binance can actually act as competitors to traditional banks. Now, without us realizing the fact that these exchanges are actually converting into banks, how will this affect traditional banks and how can investors actually take benefit from this or benefit out of the whole process of us moving on from traditional banks to crypto banks? Now, they don't call themselves as crypto banks because they're not legally allowed to do so, but actually they are providing us with all sorts of services that traditional banks do. So let's start with what is a crypto bank. Now, I call it being a crypto bank, but technically Coinbase, Binance, FTX are all providing features of banks. They provide interest rates, they provide credit cards, debit cards, cashback rewards. They hold our money as custody and provide us with interest rates on it. They help us purchasing coins and move money from one place to the other, and also provide us with a payment gateway using the blockchain technology. There might be an argument that traditional banks are actually backed by governments and our money is more secured with them. But if you look at it in a way that how do banks make money, you will think about it and realize that technically even exchange houses are making their money almost the same way and can actually provide us with better services. Considering the fact that all of these exchange houses are actually providing us with services that traditional banks do, there must be certain set of regulations that is imposed on them. For example, just keeping investors' money safely, and they should be providing some sort of a risk a surety that there will be no wallet hacks in the exchanges and so on. The one question that comes to my mind is that are these exchange houses actually capable enough to replace traditional banks, or what will be the bottlenecks or burnt bridges that might happen if we as investors stop using traditional banks at all. So if you look at it in a way, even if you would like to invest some money in cryptocurrency, that money from your traditional currency, that's the currency of the country you belong from, has to go onto the exchange from your bank account. Now at the moment, it's only Coinbase who provides such features where you can set up direct deposits into Coinbase from your pay stubs. So how this works is that your employer essentially uses your Coinbase information to set up your payment method, like how typically you would use for your banks. So that's the first step. Now, another roadblock I see in regard to them converting into banks is that the only gap I see in the system right now, or the roadblock that is for exchange houses to convert or take over traditional banks, is loading funds. So for example, if something like Coinbase and Binance set up physical ATM machines in multiple locations, which allows investors to actually go ahead and deposit cash. So that's the point where banks will no more be required, because now that we have seen Coinbase has set up direct payment methods using your pay stubs. So that one box is already checked. Now the second part comes in when you actually deposit cash and load money onto exchanges. As investors get this option to put their money onto exchanges using direct ATMs owned by the exchange they want to invest with, that's the point where these exchange houses can actually take over traditional banks. Now, keeping in mind that if investors are actually using ATM machines allotted and placed by these exchange houses, now what happens is that the government will not have much information about where the investor's money is going. Because, for example, if I'm earning a certain amount every month and I take that in cash, I deposit that onto an exchange and buy crypto, and then I send that crypto to an off-chain wallet and then trade with DeFi. So the government essentially has little or no information about how much money I've made. Now, due to this might essentially lead to more regulations on exchanges. For example, just regular investor reportings. In terms of DeFi and wallets, that will also essentially have a lot of more regulations in the coming years. Okay, now let's talk a little about interest rates. Now, for example, for banks in India provide an interest rate of 5% on savings accounts. In the US, it's about 0.01%. In Australia, it ranges from 0.5 to 1% and so on. Not to forget inflation rate currently being at 9% in 2022. Okay, now let's compare this with interest rates that are provided by most exchange houses or even cryptocurrencies on the whole. So, if you look at it in a way, cryptocurrency interest rates for staking rewards range anywhere between a 5% on Bitcoin for an exchange like FTX, or you can also look at altcoins that provide you with interest rates of up to 30%. So it totally depends on which token are you planning to stake. So the choice, in my opinion, is pretty straightforward. And if it continues to be this way, then I do not see any reason why investors will stop adding their money into their bank accounts and instead just put their money in exchanges like Coinbase or any other cryptocurrency exchange. And even if they hold their money there, they'll in a way make a lot of money by just holding on to it. And at the same time, if they wish to buy some sort of a cryptocurrency, that value might even fluctuate. So we spoke about a difference between traditional banks and cryptocurrency tokens providing interest rates. Now, how is it possible that interest rates of cryptocurrency tokens that have recently been introduced can afford to provide investors with such large amounts or percentages in interest? Now, most exchanges or most token companies allow investors to earn a high interest rates by, staking their coins, basically to promote them for holding on to the tokens. So it's more to do with basic economics. For example, if there's less supply in the market and the demand goes up, so there's a price hike. There's also a few companies that offer interest rates on products like Bitcoin. Basically, they can also trade on behalf of investors to make sure they leverage on that APR that they promise to investors. So, for example, if I'm promised 5% APR on my Bitcoin investments, if I hold it for a certain number of months, now what the exchanges can do is they can leverage that and trade using the money or the coins that I invested with them, and they might make a profit a little more than what I would get in return of 5%. It's very similar to how banks do it. For example, if you go ahead and add money in your savings account, now it's not that the bank is going to hold your money there and not do anything with it. Yeah, you do see an amount on your mobile app when you open up and see what's your balance, but that money has already been lent out to another borrower by the bank who's going to probably pay them an interest rate of 15 to 20%. And the interest rate what you get from the bank is basically almost zero. So in this way, the bank straight away made 20% of ROI on whatever money you've put in the savings account. As time passes by and we move on to a digital world, the need or requirement to go into a physical bank reduces. I haven't been to a bank in person in a long time because, I don't need to. Everything happens on the mobile app, on the phone, on my computer. However, if you would like to see that, if exchange houses need to serve the mass crowd, the people who really like to go to banks and meet, the relationship managers and write checks and all that stuff, yes, that is another gap that I feel exists and that has to be covered up by exchanges before we see the whole revolution of crypto banks coming in the picture. In my opinion, if exchange houses come up with physical banks, it will serve the investors even better. Now, for example, it's as good as Uber, right? I have an Uber app on my phone. Now I can use the same Uber app in multiple countries. So let me take an example of having a user log in as an investor for cryptocurrencies on Coinbase. Now, Coinbase, assuming the fact that they have actual physical banks around the world and ATM machines installed everywhere on the world. This essentially gives me comfort as an investor that if I have a Coinbase debit card, I can travel anywhere around the world, use that debit card at merchants, and also visit ATM banks or ATM machines around the world and just, withdraw cash as needed. It can also work as me visiting a physical branch of a bank. For example, if Coinbase has that branch exists in another country and I want to meet a relationship manager, I don't need to be having an account in that specific country because now I am a customer of Coinbase overall. I've seen a lot of stores install Bitcoin ATMs, for example, even in grocery malls or even shopping centers. So, why not exchanges install their own ATM machines and provide investors with more flexibility? Now, a question might come up in everyone's mind is that how safe is investors' money if they deposit it into an exchange bank that I call crypto banks instead of putting it in traditional banks? In recent times, we've experienced and seen a lot of private banks filing for bankruptcy, especially in India. So, if I, as an individual, I'm depositing money in a bank and then the bank is providing or lending money to a corporate company or an individual for a high interest rate and ends up not getting anything back. So the investor's money is at risk, and I lose access to all those funds because now the bank is filing for bankruptcy. So I see that with time, exchanges will also come up with better risk assurity systems and mechanisms that will help investors be more secured and feel more safe while putting their money with exchanges. And that's when there'll be more government interventions, more regulations coming through, and there will be even more insurance companies that'll step in and help exchanges like Coinbase take that assurance over investors' funds. Now, if I talk about traditional banks being replaced by exchange houses, one of the most important factors that needs to be considered is Visa and MasterCards, because we need to have a debit card in hand if you would like to open a bank account. So let me name a few exchanges that already have supports from Visa and MasterCard. Coinbase has a Visa card, BlockFi has a Visa card, Gemini has a MasterCard, Robinhood has a MasterCard, and the list goes on. Now, Visa card can be used on 44 million vendor location across 200 countries, and the MasterCard can be used across 37 million vendors in 210 countries. So now I have an exchange that acts as a bank. I have a debit card that is given by the exchange. I can essentially set up a payment system where my salaries get deposited directly into the exchange. So the only missing gap here is ATM and physical bank locations for these exchange houses. Now this might sound almost scary that the banking system that exists since hundreds of years is now ready to be replaced with something like a cryptocurrency bank, which just developed 12 years ago or 13 years ago from today. This might replace a lot of jobs that are required in traditional banks. This might replace systems. There will be a lot of usage of the blockchain. There might be more. Instead of using applications provided by traditional banks, we'll all move on to using applications provided by exchange houses. It does become more privatized, but at the same time, in my opinion, it is more efficient. It is, less time consuming. It's more user friendly. At the moment, when investors want to transfer coins from one wallet to the other or make payments to vendors, it is 100% responsibility of the investor or the person who's transferring tokens from his or her wallet to another person's wallet, because essentially you have a wallet address that needs to be used to process that transfer, and all the data around that transaction gets stored on the blockchain, which cannot be changed. So now when we talk about these exchanges moving on to traditional banks, there will be a few investors that need assistance while making these transfers. So this can be offered as a service by banks in exchange of a small fee of the total amount for whatever transfer is being made. One of the biggest advantages of this entire change, in my opinion, is that if you try making a transfer from one country to the other, I know we spoke about this in one of the prior episodes, it would take about 2 to 3 days at minimum for your money to be transferred from one country to another. Versus now, if you use the blockchain technology and actually transfer coins from one wallet to the other, it's going to reach within a few minutes. When we talk about exchange houses right now, the flat rate that most exchanges charge customers is 1% of the total value of the transaction. Either you're buying a coin, selling it, or you're transferring, whatever the case would be. In fact, a few exchanges also have a very low fee when you're transferring coins from one wallet to the other, depending on the blockchain that you use. Now, another good feature that I can think of when it comes to cryptocurrency banks or cryptocurrency exchanges acting as banks is that if you wish to not pay for, just having a bank account with traditional banks, you have to maintain a certain minimum amount in the account. Or you have to set up certain payment methods that receives or sends payments timely. When it comes to cryptocurrencies, there's no minimum requirement that investors have to keep or certain tokens that you have to hold in a wallet. There's no fee that's fixed for the entire year. However, you do have to pay fees every time you make a transaction. So let's talk about how does a transaction actually take place when you use a debit card issued by a cryptocurrency exchange. Now, for example, I have a Coinbase debit card and I wish to use it at a vendor. I swipe the card at the window using any currency I wish. For example, if I have Litecoins in my wallet, I want to sell Litecoins in exchange of the goods that I'm trying to purchase. So the exchange itself, for example, Coinbase in this case, will sell my tokens on my behalf in the open market against whatever the spot price is for Litecoin at that moment and send the vendor currency. Like, for example, I make the transaction anywhere in Europe. That exchange, the Coinbase will send money to the vendor in euros as per the local currency, and my wallet balance for Litecoin will automatically drop based on how much Litecoin needed to be sold to process that transaction. This might sound complicated, but it is all taken care by Coinbase itself, which is why, again, they would charge a transaction fee that's 1% from the person making the transaction, that's me. Now, one of the last comparison points that I have in mind is about fraud protection, because a lot of investors or even people, individuals making transactions have a certain fraud protection from banks. For example, you can have chargebacks. Like if I make a transaction and I go like, I did not receive my goods or I totally did not make that transaction, it is the bank's responsibility to get me my money back from the vendor, or they refund that amount back to my account, and then it's their problem how they deal with the refund. So this is a point where exchange houses can further develop, or this might be another step up that they need to make before replacing traditional banks. But once they accomplish the few points that I mentioned today, that includes setting up ATMs, physical presence of actual banks set up in multiple countries, and chargebacks, securities, helping customers with risks and regulations. Once these pointers are covered by exchange houses like Coinbase, they cannot be stopped from becoming crypto banks, and then traditional banks get totally replaced. So what happens to banks if exchange houses actually take over the space? Both, in my opinion, will coexist, but not everyone will move on to these crypto banks immediately. There will be a certain set of people who will still be against crypto and want to use traditional banks, but the business that comes into banks will surely decline because now investors have a lot more options to actually borrow money. For example, DeFi. I can literally load some Ethereum to my MetaMask, go onto a DeFi platform, and really take some loan against a collateral of Ethereum in USD or any other currency that I want, and use those funds at a lower interest rate. Now, this episode was more to compare between traditional banks and crypto banks. I'm not too sure what's going to happen, which one of these will sustain, or what will stay for a longer time. But I hope you guys enjoyed today's episode and stay tuned for the next one.
We hope you've enjoyed this episode of Unlocking the Decentralized. This podcast is sponsored by CryptoTax, your one-stop solution for cryptocurrency taxes. Learn more at cryptotax.co.in.